Okay, we're back. So I'm live on Instagram through the Charlie Munger Quotes account page. Did I say that right? The Charlie Munger Quotes account page? The Charlie Munger Quotes page. And there's a great question here because we're talking about building wealth and how CMQ, meaning compound money quietly, that represents what I believe to be the most like foundational truth, fundamental truth about how wealth is created. And that's, it's fueled or say, now I'm stumbling over it. I was just flowing a second ago. But if you want to, the whole name of the game here is making your money grow over a long period of time. And compound interest is that almighty force that, when you tap into it, you can build real wealth over a long period of time. The key is how much you're investing, how long you have for that money to grow, and then the average rate of return that you achieve, meaning what's your growth rate. So David followed up here and said, then the question becomes, which type of investment makes you build wealth faster? Stocks, real estate, or crypto? So, I would say to that, first of all, let's think about what we want to avoid. And this is a great little trick that I've picked up over the years from Charlie Munger. Like, instead of thinking about what we want, let's first think about what we don't want and then how we would achieve that. So the opposite of wealth is what? Poverty, right? So how do we go into poverty as fast as possible? I would say we put all of our money in stuff that's really speculative, that has a decent chance of going to zero. So right off the bat, if we take that, what's the opposite of doing that? We'd put our money in things that have a very small percentage chance of going to zero ever. Things that we understand and go about that way. So right off the bat, I would take crypto off the list. Crypto, like I'm saying this as someone who's made, and I know I was speculating, but I made, very solid money on crypto at a certain period of time. And then I had the good sense to get out of it because I knew I would never know when to get out of it because there's nothing to base it on. So if you look at what's happened this past week, and this is not a condemnation of cryptocurrency or the blockchain, I'm talking about as an investment right now. I would not go anywhere near crypto. I think unless you have, some weird, fetish of hurting yourself, whatever the word is, what was they call like a masochist. I think you're crazy to go towards crypto because there's nothing underneath it. Like I could go down a path on this, David. I know I'm going to answer your question, but so I would take crypto off the list. Next, you got stocks and real estate. Now, real estate, look, I own real estate. I'm not some like big, apartment flipping, whatever, these guys on YouTube who are like, let me show you how I have my 1,800 rentals. Real estate makes sense. I think real estate is sound, but I'm a big believer when it comes to real estate. The only reason I want to have real estate is if I'm going to live in it. Because real estate requires maintenance, it requires upkeep. There can be all sorts. You get a leak and you have to fix it. You know what I mean? So I'm not a fan of trying to build wealth with real estate by itself. The reason I bought real estate is because it made more sense for me to own where I lived than it did to continue renting. And I didn't make the investment with the hope of getting some like outsized return. So then I think it leads us to stocks. To me, I think that stocks are we should clarify something here. Wealth is typically not something that you build fast. And I think that's that sort of desire. It's a normal desire, right? Like who wouldn't want to build wealth fast? That would be the best way to build it, right? Like why would I want to make it grow? Why would I want to wait a long time to be wealthy, right? So I think, but if we think about that compounding, what I call my compounding machine, my wealth compounding machine that the CMQ mantra sort of embodies, the money that I'm putting into it, I want it to get the best rate of return possible. And so however we define fast, I think that you're most likely going to get the best rate and a reliably solid rate of return through stocks, assuming that you're doing sound things. Now, you have to do what's best for you. I'm not going to sit here and say, like, don't do this or you should do this. You have to make the choice for you. But we've talked a lot about low-cost indexing. If you're assuming that the next 30, 40 years of the market will do 7%, then you can figure out pretty quickly what you need to do and how quickly you'll get there. Now, the danger of trying to get wealthy really fast is that you might make sort of a decision that would be a mistake that would cause you to lose money on something and therefore permanently damage that average rate of return that you need as the core piece of your compounding machine. But let me zoom out for a second. So what I think makes most sense, because all of us are, generally speaking, people here, like we're in our 30s, in our 20s, I'm 12, but the point the point is, the best way the things to focus on is making more money in your whatever you do for your job, because that's more money you can save and then put into your wealth compounding machine, that it can grow at that whatever your rate of return is. Because certainly if you have more to start with now, or you're able to accumulate more sooner, then you're compounding more forcefully. So that's something I would consider. I think a lot of the time people are spending right now, and I'm only judging this from like Reddit and just I'm in this space. You know, if you're looking to like become Warren Buffett overnight, I think that's a lot less rational than trying to, you know, really lock in your career and you know, rise up the ranks. Or, you know, for me, what was key for me was starting my own business. Nothing accelerated my path faster than taking the risk of going into business for myself. Of course, there's always going to be a risk, but I think there's ways and things you should do focused on your own ability to earn money, and then just do sensible things with it and aim to get the average rate of return that the market delivers, and you're going to do just fine. You're going to do, I would argue, better than most. So that's just my thoughts. For CMQ Investing, my name is Chris Franco. Thank you for watching this video, and make sure you check out the links that are in the description. There's a lot of great original content there that you can enjoy and hopefully use to your advantage as an investor. Nothing in this video is financial advice, but I sincerely wish you all the best in your future investing endeavors.